Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mike Munoz, Partner and Chief Revenue Officer with Canoe Intelligence, to discuss why more investors are adding alternatives in private markets to their portfolios and the solutions that technology provides to improve workflow challenges. Mike, it's great to have you with us. Welcome to Trade Talks.
Glad to be here, Jill.
In recent years, we've seen explosive growth in alternative investing. Who is typically investing in alternatives and private markets today, and what are they investing in?
Sure. Yeah, we've absolutely seen explosive growth in the alternative investment space. Yeah, I think studies from Preqin and the like would confirm that. Really, it's broad based, and so when we talk about alternatives, we're really not just talking about private equity and hedge funds. You know, we're seeing more and more direct company investments, joint investments, private credit, private loans, real estate exposure, even non-marketable assets, like wine, art, and digital currencies. And so historically, I think alternative and private investments are often less correlated with traditional equity and credit markets. They can offer higher return profiles or different return profiles, but with that, they can offer different risk and illiquidity issues. And so traditionally, most alternative investments have been held by institutional investors and allocators, large asset managers, even ultra high net worth individuals or family offices, right? But in the past few years, we've seen more and more capital from non-institutional sources, wealth managers gaining access for their clients, liquid alternative funds accessible for retail investors. And I think the data indicates that this trend is certainly here to stay.
So with more investors adding alternatives to their portfolios, does this pose any challenges to the industry?
Certainly, excuse me. Yeah, I think aside from perhaps the illiquidity risk, there are two that I'd highlight. And first is transparency. Second is operational complexity. So as we know, private markets are notoriously more opaque than public markets. Private companies are under no obligation to reveal earnings, share financial information. Private and alternative funds have few reporting requirements back to their investors. There is no standard, right? So gaining access to the information about a fund, about an investment in a deep, consistent way is difficult. You can't just log into a brokerage account and understand what you own, how you're positioned, and how this rolls out. Moreover, alternative funds in particular often share information in disparate formats, in disparate frequencies, different locations. Typically, the information's locked within PDFs. So this introduces significant what we call post-operational investment burden, really related to complexities around document collection workflows, difficulty managing unstructured data, normalizing data, and ultimately additional cost pressures related to managing these workflows that simply don't scale.
So Mike, how are alternative investors solving these operational challenges, and what are the differences between these kinds of methods?
Certainly. So generally we see three approaches, some more legacy than others. Oftentimes, or historically, firms have built teams of operational professionals, ultimately teams of data entry analysts, to manage this process. That's expensive. It doesn't scale. It introduces risk related to data quality, data latency, data access. More recently, we've seen some of that shift to outsourced providers. Ultimately, you're taking the issue and you're moving it to someone else. That can be more cost effective, certainly, but you sacrifice control and oversight. What we've found is certainly growing is automated technology. And the approach here is the technology solution has to free up and empower teams to refocus their human capital on areas that are more critical to business outcomes.
What do you think are the most important aspects of technology to serve this community?
So there are a number of things. I mean, table stakes, really introducing speed, accuracy, efficiency, and scalability to an existing process. But beyond that, what we found is that, at least at Canoe, we've taken the approach of solving for the entire workflow, understanding end-to-end what human teams have historically been executing, and bringing a technology platform that touches on each one of those components. So in our world, that means automating document collection, data extraction, and downstream data delivery. In others, that means very different things.
And Mike, to wrap up here, how do you think technology is going to play a role in alternatives data management going forward?
Yeah, it's obviously an exciting time in our space, and I think the role of technology continues to evolve, particularly as the asset management or the alternative investment management industry continues to grow. So conversations we're having in the marketplace suggest that firms are very open to introducing automation and efficiencies into their ecosystem. They want to scale their teams more efficiently. They want to allow their employees to focus on value-added tasks. And that's been validated through our client base. We've seen tremendous growth. I think there's certainly a reduced skepticism in the market with respect to technology. Can technology do this job better than I can? You face a lot of that. That's certainly dissipating. And so from what we can see, we certainly expect to see continued rapid adoption of technology in the space in line with the growing alternative and private investment market.
All right, Mike, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.